Good morning and welcome to the 645th meeting of the Economic Club of New York in our 115th year. I'm Barbara Van Allen, President and CEO of the club. For our discussion today, we're going to kick off our first Crypto Series event, and it's a pleasure for me to welcome our guest, Sam Bankman-Fried. Sam's an MIT graduate with a degree in physics who started his career in financial markets with Jane Street. He traded a variety of ETFs, futures, currencies, and equities, and designed their automated OTC trading system. After Jane Street, he founded the quantitative trading firm Alameda Research, and in 2019, he created FTX, which is now the largest crypto trading exchange outside of China. Today's program will be a conversation which we're very fortunate to have club member Anna Nikolayevsky, founder and CIO, Axel Capital Management, as our moderator. Thank you both for joining us today. We're going to end promptly at 11:30 due to tight schedules. And as a reminder, this conversation is on the record and we do have media on the line. Without further ado, Anna, the mic is yours.
Thank you. Hi, Sam. You're driving innovation in the financial and blockchain industries right now, and you've become the face of entrepreneurism in America. You have a very large following. Some of your followers are literally obsessive and focus on whether or not you tie your shoes. So what's really impressive is that you had a vision and you were able to execute on the vision. Can you talk about how you went from an ARB idea to an actual exchange formation?
Yeah, so I first got into crypto because there's just like good trades to do, and the good trades are actually pretty easy to see at the time. You just looked at the price of a Bitcoin on two different exchanges, and you got two very different numbers. And that's where they started was literally just doing arbitrage on cryptocurrency exchanges. And so I spent a year doing that basically, buying on, there'd be a 1% spread between Coinbase and Bitstamp. So I'd buy $10,000 Bitcoin on Coinbase, send it to Bitstamp, sell it for $11,000, make $1,000 on that was sort of like the core idea. And some of them were a bit more elaborate to do than that, especially when you looked internationally and you found, places where it was, where it was not easy to get the money back and forth to be able to get money to and from Japan. But that was sort of like how it started. And, over time, what it grew into was, a general sort of cryptocurrency quantitative trading firm called Alameda Research that, I spent the first year building out. After about a year of this, it was just becoming increasingly clear that there were really big problems with the infrastructure in the crypto ecosystem. And you could sort of see this all over the place. You could see this when you looked at the blockchains themselves not having the throughput necessary to sustain, the level of activity. But, the biggest were the exchanges. The exchanges in crypto are the sort of full stack trading infrastructure products. And, they're losing $1 million per day of customer funds to having incompetent risk controls. The matching engines would crash whenever there is volatility. The compliance departments were non-existent in many of them. It was just overall a huge mess, and meant that the space was not what it could be. We'd spent a year using those products and getting increasingly frustrated with them, and basically at the end felt like fuck it, we can build something better than this. Like if this is the state of the art, this we can beat. And so, ultimately ended up building out FTX, starting in late 2018 and launching in spring 2019.
Okay, so how did you manage to come back to the Bahamas from Asia? What drove that? And why the Bahamas? Not Switzerland, why not Zug?
So there are very, very few jurisdictions in the world that have a license for a cryptocurrency exchange, especially a comprehensive licensing regime that accounts for futures and spot products and stable coins and everything else. The Bahamas is one of those few, and it was the largest reason that we chose here to be, the international headquarters was it was a place that we could have a license, that we could have a regulatory oversight. And outside of that, it's really conveniently located. It's a nice place to be. There's open travel to and from it, which is not true of a lot of the world right now. And that was one of the actually more sort of urgent impetuses, was we need to be in a place where we can visit people, where people can visit us, where international travel is possible. And in this day and age, that's actually a tall ask. And so that was another key driver behind the Bahamas.
Great. So can you talk about your business and what parts are growing the fastest, and in terms of just end markets and geographies?
Yeah, so overall, if you look globally, the world GDP weighted is not a terrible proxy for where our volume is. We have users all over the place outside of, other than sanctioned jurisdictions. And so that's part of the answer, is just sort of like, well, everywhere. But our core demographic historically has been power users. It's been people who trade, millions of dollars per day of volume, rather than sort of retail, consumers. We do have a wide variety of users, but again, the vast majority of volume today comes from the power users, and the vast majority of revenue. So that's been sort of the the biggest piece of it, historically and today. I think we're anticipating a lot of growth in the United States over the next year or so, as we build out a more comprehensive product suite there. Potentially, using our CFTC license, which we're really excited about.
So how do you think about profitability versus market share?
Yeah, it's an interesting question. And, for us, we haven't done a ton of paid advertising. And so, we're not in a position where there's, a huge split in terms of, the difference between revenue and profit, for instance. Like we are profitable, and I think intend to stay that way. I think, one thing worth noting is when you look at something like market share, you can measure it by people or you can measure it by volume. And again, like historically, we've been biggest on power users, which means that, historically, we have had, way, a lot more sort of revenue than user base count, so to speak. And sort of one metric of that is we have something like 3% as many users as Coinbase does, maybe 4% now or something, but 3 times the daily trading volume on our platform as on Coinbase's. And so it's a very different core demographic. And while we have pretty low market share in terms of raw number of users, we're working on that part. In terms of the power users, we've been one of the largest platforms globally.
Okay. And you're planning on getting into stock trading? Most of the American companies who provide trading do not provide free quotes. Most crypto exchanges, however, do. So
yeah,
are you planning on being even more disruptive and doing free quotes? And how do you feel about potential commissions?
Yeah, I mean, we would love to. And it's worth noting that at the beginning, we're likely to be the license that we have right now is a broker-dealer license. And so it doesn't allow us to operate as a fully independent exchange. We are, effectively a brokerage for other venues today. And so there's a limit to how much impact we can have with that model in terms of the core exchanges market data, but we will certainly be sharing any market data that we are allowed to. And to the extent that we are in exchange for products, we always intend to make all of our market data free, and hope that we can expand that purview over time. And so we do want to have to be disruptive in that sense, because I think it's the right thing to do. I think that like market structure makes a lot more sense if you can have if everyone has access to the actual data of the markets they're trading on. I think it's sort of ridiculous to be forcing people to send orders blindly into a book.
Wow, that's actually huge. So can we talk about your vision for the future of social media interoperability and what that means to you and potential monetization ways?
Yeah, absolutely. So, right now, if you look at social media, every platform is effectively completely independent. You have there's no if you're on Facebook, someone else is on Twitter, you can't communicate with each other, and that causes. I mean, there's a lot of flow through effects from that. It means that there are big moats associated with them, that it's harder to get into the business because you would have to break through that sort of network effect. It creates a fractured experience, and it also means that you end up with extremely large moderation powers with a very small number of people. And I think one really cool thing that you can potentially do with blockchain is end up in a world where an underlying decentralized blockchain stores people's actual encrypted social media messages, and so those can then be accessible across platforms. Any platform could potentially draw on that same wealth of core messages, but that each platform can build their own user experience on top of it. It means that they're interoperable with each other. It means you don't have one central party controlling all of the moderation on a platform. I think it's pretty powerful in a lot of ways, and would be really excited to see that vision come to fruition.
Okay, can we talk about identity? Can you streamline an NFT, an individual, and then create a lending or a marketing or an insurance platform from it? So if you take my identity and where I went to school and where I worked and my payment history, could I walk through the metaverse and be offered mortgages and crowd lending?
Potentially, yeah. And I think that that's one of the powerful things that DeFi can get to, and that blockchain can get to, is true interoperability across all types of platforms, not just between two different social media networks or two different financial platforms, but between a social media network and some avatar identity system and NFTs and financial markets. And so you could have all of those read from each other, all those interface with each other, all composed natively with each other, as cleanly as if they were one program. I think that is really exciting. I think that's part of the potential promise of blockchain.
So that obviously benefits the user, but how do you capitalize on that? How does an enterprise make money off that?
Yeah, I mean, part of my answer is sort of like, well, I think if it's valuable enough for the user, you should be able to find ways to monetize it. And if you can't, that's probably a sign that like it didn't bring as much value as you thought it did to the end users. But I think that there are lots of places that in a competitive marketplace you could have a fee associated with various pieces of that, and obviously people could switch platforms if they didn't like the fees on yours. But I think trading fees are like one example of that.
Right. What's your strategy for the venture capitalism that you recently established? Yeah,
so there are a few pieces, and one of it is that we just more generally want to get involved in the VC space, both in crypto and outside of it. We want to be an active investor. We want to be supportive of the people that we invest in. We want to make sure that we are a good partner for them, that we don't get in their way. That if we are intervening, it's because they want us to be and helping, rather than just sort of causing a headache for them for no reason. And I think the last thing is, we're willing to take bets on companies that we think can have a lot of impact without needing to have certainty about where that will end up, and without needing to put terms in for investments that force sort of super risk averse behavior on behalf of our companies because we need to make some specific return or anything like that.
Is anything oversaturated right now, given the huge capital flowing into the industry in VC?
Yeah, I think that some sub areas certainly are, and I think that when you look at, I think in particular there's sort of like some indiscriminate funding coming in, and so I think some I think especially places that I don't think have as much room to grow are probably getting quite too much capital flowing in. I think you also see a public-private market split right now. But I think that like one example is I think that there's not nearly enough work being done on sort of innovative NFT applications, and probably too much being done on like existing NFT projects. And I would love to see that shift a little bit towards where I think really cool future applications lie.
So do you think smart contracts are basically the largest TAM when it comes to the blockchain?
I think that's probably right. I think certainly when you look at like the blockchain layer itself, as opposed to sort of infrastructure layers put on top of it, I think that smart contracts are almost certainly the biggest TAM. I'm not sure if you want to, if you were to say like, okay, but which is bigger, that or like the exchange layer or other things, then I think that becomes less clear.
Okay. So is crypto the ultimate democratization of finance?
I think it's a piece of it. I think it isn't like, the solution to everything put together, bundled into one object, but I think it can help facilitate a lot of that. I think they can help, and I think social media is one example. I think, the existence of crypto doesn't mean that social media is fixed or anything like that. But I do think that crypto can help address a lot of problems that we've seen. And I'm super excited for that. And I think that like, if you use blockchain technology correctly, it can help democratize finance. And I think already it's a lot easier for most consumers to get direct, equitable access to financial markets through crypto than through almost any other means.
Okay, thank you. And you've been pretty busy spending time on the Hill, and you've been participating in many congressional hearings. And right now you're basically paving the road in terms of regulation. Do you think that it's important for America to play a leading role in regulating crypto? And why is it strategic?
I do think it is. And I think that part of this is that, looking at American competitiveness, looking at, wanting to have US oversight of those markets. I think both those are important. And being able to strike the right balance between fostering economic growth and providing consumer protection and protecting its systemic risk and financial crimes. I think all of that require America playing an active role in providing oversight and licensing for the industry rather than sitting on the sidelines.
So what do you think is the biggest issue that's preventing regulation? Is it education, lack of knowledge? I mean, what do you think the largest issue is right now? Because it seems like people are definitely dragging their feet, and there's a purposeful gray zone, and regulation is by enforcement. So what do you think is causing this?
Yeah, I think there are a lot of things that are sort of flowing into that. And I think that like, it isn't just one thing. But I think a lot of this is that, there is more education that's needed. I think it's also just really like, if you look at legislation, for instance, like it's really hard to pass new legislation right now. It's, not just in crypto, but in anything. And so the extent that a legislative approach is necessary, that's not something that I expect to happen short term. And so because of that, I think you're seeing more regulatory activity than legislative activity on the front. And I think a lot of this is trying to find the way to strike that balance to have regulatory frameworks built out without immediately requiring new legislation, being, enabling regulators to build licensing regimes for the space.
So do you have a time frame in which you expect progress? What's your view?
Yeah, I think over the next year.
How would you do it?
I think over the next year, we're going to see a fair bit of progress. Like, I think I'm like fairly optimistic about that. And I'm not saying it's all going to get fixed tomorrow or anything like that. But I do think that we're already starting to see some progress, and I expect that to continue. So overall, I think, that's made me more optimistic than I used to be on this. I think that, what would I do? I think one thing is having a token registration system, something like the current equities registration system, but adapted to fit, the properties that are sort of specific to tokens rather than equities. So I think that's one piece of this that I'd be really excited for. I think that, another piece of this is, having a specifically a stablecoin registration system. And then I guess the third thing that I would say would be having just clear market oversight, especially for spot markets in crypto, clarity around, which regulator is overseeing those. Those are, I think, the biggest things that I'd be pushing on.
So do you think that there should be a crypto czar that would coordinate between multiple agencies? Or would that be worse because it creates more complications with the SEC and other groups?
Yeah, it's a good question, right? Like, to the extent there's too many cooks in the kitchen, maybe you need someone to sort it out, but maybe that's just another cook in the kitchen. And I don't think you need a crypto czar here. I don't think that's a necessary part of this process. I think it could be a helpful part, but it could also be a harmful part. I think it's like basically totally depends on who it is and what their approach is.
Right.
And, rather than thinking of like that as the missing piece to this, I think what I would say is like, whatever role someone nominally has, if they're pushing for, sensible regulatory oversight, that's helpful. And if they're not, then that's unhelpful. And so I think that it's less a question of what role is needed and more a question of like actually getting stuff done.
So as a trader, what do you think of the correlation between NASDAQ and crypto right now? And is that sustainable? Because given the inflows, I thought maybe the correlations would change.
Yeah, I mean, we've certainly seen a pretty strong correlation recently. And I think the reason is basically that, what's been moving markets recently, it's, basically it's monetary supply, Fed news, inflation, and those things are going to have similar impacts on crypto as they do on equities. And so I think that, when you're looking at economic news coming out as opposed to monetary news, you might see a bit of a decoupling, but when it's monetary news, I do think that you're going to see tight coupling between crypto and stocks. And that's why I think we've seen that recently.
So do you believe that if all of a sudden the Fed backed off and would not hike rates, that would be beneficial for crypto?
Yeah, I think it probably would be.
Okay. Do you own crypto yourself?
Basic answer is through my companies, I do. I don't like really do much finance outside of the companies I've invested in, because it's anything that makes sense to do, it just makes sense to do through those.
Okay. So one of the best and unique things about America is the culture of giving. So why do you care at your age, particularly, about philanthropy?
I think that like in the end, the impact that we can have, the positive impact we have on the world is what matters the most. And, I think that like I'm fortunate to be in a position to be able to give, and want to follow through on that. I think it's always been the thing that's been ultimately most important to me, and that I want to be following through on, supporting some of the best things going on in the world.
So what are you focused on in terms of philanthropy? What are your objectives, and what are just some end markets for that?
Yeah, so in the end, I want to do whatever has the most positive, impact on the world, whatever that might be. But more concretely right now, things that I'm looking at, I think probably, some of this is looking at neglected tropical diseases, malaria, schistosomiasis. Some of this is looking at animal welfare, but the biggest thing that I've been looking at recently has been pandemic preparedness. Has been, we were not ready for COVID. How can we be more ready for the next pandemic? And what should we be doing today, because the next pandemic might be substantially worse than COVID was.
So the other day, New York Stock Exchange announced that they're planning on trading NFTs. So I think it's kind of ironic that you want to get into stocks and the NYSE wants crypto and NFTs. Do you think that they're going to gain share in that market, or do you think it's going to stay with the natives?
I think it depends on exactly how much they're going to be pushing in that direction. And I would be surprised if they ended up making that big of a push there. But, I could be wrong, right? Like maybe this really is going to be a huge priority for them. It wouldn't have been my guess, but, but if it is, then they could certainly make a big impact there.
So are you spending any time, or are people on your team marketing to institutions And is there, what is the biggest conflict between institutional investing, or basically what objections are you hearing, if any?
Yeah, I think it's less like specific objections that we're hearing. And I think it's a lot more sort of, nervousness and wanting to get clarity on the regulatory framework, wanting to be sure that they're operating within bounds in a world where the boundaries aren't clear. And I think that's been sort of the biggest tension there. And, I think that like over time, we're going to see people getting more comfortable, but it is going to take time. So we are actively, talking with institutions. Some of them are signing up. I expect that that's going to be a longer process though, because these are, tend to be somewhat slow moving institutions.
So do you think it's going to be a 5 to 10% asset class by the end of the decade, or what growth do you expect?
It's really hard to tell. And I think a lot of that does depend on what the regulatory progress looks like. It depends on where institutions, end up. But I think it's, I'm optimistic that we're going to see a lot of progress and that ultimately we will see a lot of growth over the next decade. I certainly wouldn't promise it. But I think that another thing that you ultimately have to do is try and think about what exactly do you mean by the industry, right? Like when we look at like crypto market cap right now, it's somewhat clear what we mean, but if we move into a world in which there are tokenized equities, for instance, right? You probably don't want to count all of Apple's market cap as crypto market cap, even if it is happening in tokenized format. But I think that drives to one of the interesting aspects and one of the ambiguities in how you even measure crypto market cap going forward.
So if you're looking at synthetics and NFTs, is the market cap basically unlimited?
Yeah, I think I think that's basically right. Although that, it gets the question of like, well, okay, what are you trying to do when you're measuring market cap? Like, what's your actual goal there? And to the extent that your goal is to be, deciding what investments to make today, worry what matters for that, because to some extent, like the, not all of that is going to flow through to like, current tokens or anything like that. And so, I do think you get sort of different answers depending on how you feel about that.
Okay, so it's been publicized that you only sleep 4 hours a day. Has that always been the case, or are you just working harder now and spending more time sleeping on the beanbag, or less time, or is that true?
Yeah, I think I sleep a little bit more now than I used to. It's probably up to five or so on average night, but I don't sleep a ton. I do still sleep on the beanbag many nights. In the end, I think it's helpful for me to be able to stay sort of in the zone, to stay really focused on work. And I think that there is a huge difference between when I'm only somewhat focused and when I'm very focused, and want to be on the latter end of that. So
thank you, Sam.
Thank you.
That was an incredible conversation. Thank you both, Sam and Anna. Really, really wonderful. And I know that we're on a tight schedule. So what I'm going to do for everyone attending is just say, please check our calendar. We're adding events all the time. Here on the screen are a few. You can see we have a member conversation coming up February the 22nd on the fragility of the grid. It's actually grids. So we're excited about that one. That'll be an off the record. We have Dr. Nuzzo from Johns Hopkins talking as a doctor here, epidemiologist, there we go, about the virus and where things are headed. We have our annual Women in Business Conference, March 7th, and we do that every year with the Council Generals of Canada and France. That's really going to be an exciting one. There are a number of different Zoom meetings and panels, so please mark your calendars for that. We just opened recently the Crypto Series second event with Michael Saylor, Chairman and CEO of MicroStrategy, and then on April 11th, Thasunda Brown Duckett, the new CEO of TIA. And we have lots more being confirmed and added to the calendar. So this is actually already out of date. So again, check, please, online. And thank you all for joining us today. Have a great day.